Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus yen as it moves to the upside in early U.S. trading, helped by some stronger than expected data. So let's get started. We saw the ISM data come in better than expected, with the PMI rising back above the 50 level from 48.4 expectations of 47.8 previously. So that's a good news. We also saw the price index move higher, and that is pushing the U.S. dollar to the upside. First off, taking a look at the daily chart, we have the 2022 high price. It came in around the 95 level, and this high price from the month for 2023 came in at around the 91 level. And in trading last week, the price did move above both those levels, reaching a high of 151.967. It's not shown there. This is the old high right here, but the price moved above those two highs, taking the price of the dollar yen to the highest level going back to 1990. The price could not extend any further, and we started a rotation back to the downside, but the rotation was modest. Now let's go to the 1 hour chart and see about that modest retracement. This is what it looked like here. We came down to the low price that we saw not a week Friday, I guess. That's at this point right here. We came down, tested that level. Right here, that was on Wednesday, and Thursday and Friday we sort of went sideways. And trading here today, we went sideways as well, as most of the world was celebrating Easter Monday, at least in Europe, and then so things were very quiet here, with the price staying around the 100 and 200 hour moving averages, which are near converge, caused by this sideways price action up here near the highs. But the data came out strong, and we saw the price move higher. Now, what's next? Well, looks like we're on our way toward the high prices that we saw in trading last week. This high came in at the 151.85, 86 level, and again, this high price came in at 151.967. So those are our next key targets on the top side for the dollar versus yen. The 100 and 200 hour moving averages now remain as support, as long as the price remains above those levels of price. Bias remains more to the upside, so we can expect further upside momentum above those two moving averages. If we were to move below those levels, then things would change, at least in the short term, and we'd have our focus return back to this swing area through here, which was a swing ceiling. It goes back further back through here, but these highs formed this ceiling before moving to the downside. It wasn't until a few weeks ago that the price traded above and below this level, but reestablished a support in this swing area before moving to the upside, and we haven't been down to that level, this area, since then. So that would be the next target on the downside, but we do need to get below these two moving averages before then. But right now, the buyers are more in control, looking toward their highs, looking for the highest levels going back to 1990 in the process. That would move above the 151.967 would do that for this currency pair. My name is Greg Mikulowski with a technical look at the dollar versus yen. Good fortune with your trading. Bye-bye now.